Good day, traders. Doing this a little bit late today, about an hour late. Had to go out and about there earlier, so that is the reason why. Sorry about that. It is Friday. As some streamers say, Fresh Cash Friday. Is that cash fresh? Fresh off the printer? Yeah, whatever. Okay. It is Friday, and the markets have done what they have done. Let me show you. This is the 5-minute time frame. We're looking at the NASDAQ. We have dual wicks down here. See them wicks? Now those wicks are not lying. There was more buyers than sellers, up it went. More buyers than sellers in this one, and up it went. Here's another one. More buyers here than sellers, and up it went. Look at that, eh? Look at all the wicks here. Triple wicks. Quadruplets. They were right. More buyers than sellers. Buy it here. Up it goes. And then up here, we had more sellers than buyers, and down it went. That's pretty neat, eh? The wicks sure did not lie today. The wicks told you what to do. Yeah, they were good. They were good. Okay, we have a dual bottom. Or double bottom, and we have divergence running off of that double bottom. All right, that's cool. So we would have got in long. I know, it's way the hell up here. Look at how many pips stop that is, okay? From there to there. 66 pips stop. Did we get 66 pips up here? No, we got 64. So common sense would tell you, if you had 64 and it started stalling and pulling back, wouldn't you want to click the button as it started to pull back somewhere in here and say you got like 57 points? I know I would. You're not going to like let it run and miss your take profit by two pips and then let it run all the way back down to the stop down here. Would you do that? Well, if you would, I'm sorry, but I have to say that something's not computing to each other in your brain. Because you could tell, like right here, or even here, or even over here, hey, it's finished going up. It's going down now. Get out. Take the profit that you have and take it. So what my whole point here is this. If it comes within a pip or two, or even 3, or even 4, and you see the price start to hesitate, take the profit. Take it and run. Run for the Kentucky Hills, man. Okay? Okay, cool. Now, let's look up here now. We have a high, and Amigo 1, Amigo 2, Amigo 3. That's what we have, 3 Amigos. Higher highs. See that? Yeah, yeah. And over here like this, see? Now, if this divergence right here was over here, let's say, I would not want to try and sell it in here if there was divergence here. Okay? Why? Because it just started this uptrend. But you see how it kept going up and down, up, higher high, higher low, higher low, higher high, higher low, see? It's about to stop. So if you had a trade up here, divergence, which I'm showing you right now, I would take it. You see what I mean? Let me just show you here quickly what I'm trying to say. So say we had divergence right here, okay, to sell it. And everything lined up on the 5-minute, right? Now let's look at the 15-minute. Was the 5 below? See, we would have been selling it here where I marked it. Would have we been on the 5-minute? This is the 15. Would have we sold in here is what I'm trying to ask you. No, and there's a reason why. What's the reason? The 5 is above the 7. That's why. You wouldn't do that, okay? So that's why you use that filter. You can use it at the starting, the starting of a trend and its first little retracement along the way, right? And But you know, you wouldn't really you wouldn't try and sell here. But after it went up all day long like this, Marianne, then you get divergence like right here. Even though on the 5-minute, okay, oh, come on. Okay, so the 5-minute would have been telling us to sell over here. Let me show you. Right there. You would have sold right here, right? So let's go to the 15. See? The 5 was still above the 7. So if you were following my rules here, you wouldn't have took this trade short here. But I would have taken it short. You can take a chance because it ran up all this time, all the way up. But over here, it was just at the beginning of an upward trend, and that's why I wouldn't take the trade here, and that's where I had it marked. But I would take it up here on the 5-minute, selling it here because it ran up all this way. That's what I'm trying to say. Anyway, I hope you grasped what I was saying. If I confused you, I'm sorry. I didn't mean to. I was trying to help you. Okay. Let's move on now to the S&P. It's probably going to look very similar. We have a low and a lower low right here. This is the 5-minute. Okay, we can put it right there. This here is the high of yesterday, this white line. Pretty sure it is. And we got the divergence here like this, and we would have got long in here like this. This is now the S and the P, ladies and gentlemen. We would have got long here. Stop would have been 8 points. Went up 8 points, almost 9 points. There you go. You would have had it. And then up here, we got a double high, right? Right there. And right there. So you would have sold it right in here. Stop would have been 5 points. Did it go 5 points? Oh, yeah, it went 6.5 points. You would have got your money. You would have got your 1-to-1. Okay, let's go down now to the Dow. The Dow is a little different, like this, and like this. You would have got in long here. I noticed yesterday looking at the charts, there was some trades on there, and I didn't see them. They were hidden divergence. I didn't see them. So you would have got long right there. And your stop would have been 45 points. There's 100 points. You would have got your 2-to-1 win-loss ratio on that trade. And was there a trade? Oh, yeah. Yeah. There was a trade also up here. Just like that. You would have got short in there. Down it went. What was I missing over here? Did I draw it in? Yeah. What I've been doing is forgetting to draw in all the lines these times, and I got to make sure I do that. So I got to do this in a sequence. I remember falling off my little wagon of how I mark up the charts before, and then I caught on that I was doing it. And when I went and looked at the charts after, and I didn't put the line down here, or the line up there, or the arrow here, or the fist over there. Let's get some water. Okay, so let me move on here to the pound. Where's the first divergence on the pound? Okay, it's right here. Okay, so I've got to do my sequence where I first put this on the chart. It's a low and a lower low. Then I come down and I put this on the chart to show that it's divergent right there. Then I got to put on the arrow. Then once I do that, you get in long right there. I've done everything. I've marked everything. And I didn't forget anything. So anyway, if you would have got long right here, your stop would have been 20 points. 20 pips. This is the pound dollar, and it went up 31 pips. Then we had another trade. I think it was this one. Just put it up there to make it look more interesting. And right there. And now I got to put on the arrow. And the arrow was to enter right there. And let's make this bigger. And all the way down, you can see all the higher close, sell it, down it goes. Higher close, sell it, down it goes. There's a whole bunch of them, see? Yeah. And they worked good. And here's a lower close, buy it, up it goes. So we'll put one of those doodads on there for you. Right there. You would have bought right there on the opening of this candle. And up it went. Let's take a look at the euro now. Oh, look at that, eh? Just a sidewinder. Wow. There's no trade up here either. Or is there? Oh, I'm tired. High and higher highs. See that? Yeah, there it is. You would have got short there at about 7:15 a.m. Eastern Standard Time today, before the U.S. session opened. You would have got short here. And down it went. 57 pips on the Euro USD. Let's look at the pound yen. What did it give us? Ooh. I see it. It's right here. Hidden divergence. Somewhere up there like that. And we put the arrow on, your entry would have been right there. Remember, the 5 has to be below the 7, and the candle has to close below the 7 and the 5, see? Everything's in alignment to sell it. And then here's a higher close, sell it, and what happens? Sell it right on the opening of this candle. What happened? It went down. You made money. You made what's this? Pound yen, 46 pips, 47 pips. Your whole drawdown was this little bit here, 5 pips. See that? See how beautiful that is? And what do we have down here? Oh, could it be a double bottom? Nah, it couldn't be. Could it? We also have it here. Let me show you. It's here. That's easy. That's a low and a lower low. That's easy to see bullish divergence. Other divergence traders would call this regular divergence. I call it easy to see divergence. It's the hidden divergence that's hard to see. This trade, see how kind of like, you know, difficult it is to go look at all of this and go, really? Is that hidden divergence? Really? Is it? Doesn't really look like it, does it? No, but it is. It's hidden divergence, and it was successful. And so is your higher close, sell it down and go successful. And so was low and lower low successful. And let me show you and finish. Because down here, not only did we have a low and lower low, we had a double bottom right here. So that's double bottom divergence. You got 2 different kinds of divergences confirming, yeah, man, there's a good chance this sucker's going to go up here. And did it go up? Oh, it did, man. It did. It went up. It went right up, man. Come on, man. Crazy. 50 points, man. And the stop was only 20. Beautiful, eh? Isn't that all beautiful? It's like a beautiful woman with blonde hair and blue eyes. Yes. Yes, indeed. Let's look at the euro yen. Oh, whoa, 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 whoa. Look up here. Do you see anything up here? Oh, yeah. I see it. I see it. Right here. See, it's going up. This one, see? It's going down. This one's going up. Wait a minute. It's divergent, I know that. They're diverging from each other. This one's going down, this one's going up. Sometimes, see how I get confused? It's like I'm dyslexic sometimes trying to find these these hidden divergences. It's crazy. It's nuts, man. It's nuts. But anyway, that was divergence, ladies and gentlemen. Entry was right there. Candle closed down below the moving averages. The 5 crossed down below the 7. And you would have jumped in right on the opening of this candle right here where I'm pointing. Right? You would have sold it. And your stop would have went right here, 25 pips up, just above 155.500. This is the euro yen, 155. 155.50, I should say. There you go. See? And did it go down 24 pips? Oh, yeah, it went down 58. And then it did a retracement, right? It's not a smackdown trade because we needed the candle to close above the 7. We didn't get that there. But it's still a higher close. Sell it. Down it goes. See that? Woo! Beautiful. 45 points. Then what did we have down here? Then we had a low, or we're going to put it right here, I guess. A low and a lower low, see? And a low and a higher low on the OSMA. And where would have we got in? Right here somewhere. So we got in right there. Our stop would be at the swing low, 27 pip stop, and it went up 33. So you would have got, so far you would have got your 1-to-1. If it drifts higher into the day, you would have got your 2-to-1 maybe, or 1.5. Don't know until it happens, right? Oh, and by the way, did I tell you that I am not a financial advisor? Okay? I never went to school for no financial stuff. I'm just some Canadian guy that says, how's it going, eh? Hey, what's up, eh? There's a lot of people who think that's funny how we say that, like, if somebody says something and we go, eh? They think that's funny. But you know what I think's even more funny? In the United States, they go, huh? Somebody says something too, they go, huh? Oh yeah, I just woke up. Huh? You know what I'm saying? It sounds even more, how'd you say, redneckish than my A. Anyway, it's funny how we all have accents, all of us. We all have different accents from all over the world. Yeah. And some people say A, and some people say, huh? You know what I mean? And some people say yes, and some people say no. And some people say, what? What did you say? And then there's the ones that I don't like. They say, sorry. If they didn't hear what you said, they say, sorry. And you know what I say to them? I say, what are you sorry about? Because there's no reason to be sorry. But this is what they've been taught to say. That's from England more so, eh? If you say something to somebody and they didn't hear you, they say, sorry? What did you say? They don't say, what did you say? They just say, sorry. Yeah. It's funny how we all say different things, eh? Nothing wrong with any of it, okay? I say A. What do you say? Okay, let's move on. Now, we're looking at gold. What did gold do today? Oh, it did a run and then it did nothing. It did a chop shop. Then it made another little run back, and then some more chop shop. Oh, yeah. We could call this divergence, right? Right up here, double top. Yeah, for sure. Just like that. That's divergence, right? Goes across and then goes down. And if it was double bottom divergence, where we draw it down here, it would go up, not down. It would be the opposite because we're doing it from the bottom. See what I mean? It's kind of confusing, I know. I'm sorry. But that's how you draw it. But anyway, there was a trade here. Okay, just wanted to show you that, even though there really didn't look like one. So if you got in on the opening of this candle right here, and your stop was 84 points, did we get 84 points? Yeah, we got 89 points. We got it by the skin of our teeth. Isn't that cool? Isn't that weird, or isn't that amazing how nearly every time I show you a setup and I show you where you would enter, you'd measure your stop, and your stop is equal to the bottom here, well, past it, where you would have got your 1-to-1 win-loss ratio. Why is that? I don't know. I've noticed it, though, and this is why I keep telling you, don't start dreaming. When you get into a trade and it's looking really good, don't start dreaming in la la land saying, oh, it's going to go down 200 points, man. I know it is. I know it is. And it doesn't. It only goes down the amount of risk that you placed for your stop loss. And it only goes down that, or goes into your first target. Why that is, I don't know. Just like how many times I've showed you that where we jump in the trade and where we put the stop, 9 times out of 10, it doesn't go back to the stop. Why does that happen over and over again? I don't know, but I'm sharing it with you. And whether you see the gold here or not, did I tell you I'm not a financial advisor? Okay, I think I did. But you see what I'm saying? It's like there's some magic to this. There's some hocus pocus. Stardust. Moon dust. Yeah. There's something here that's strange. I don't know what it is. But all I know is every time I find the divergence, I get in at the exact right place to get in. You measure the stop. You put on your stop. You do the same measurement to your target. And you put on your TP. And it hits it 8, 9 times out of 10. Don't know why. Never goes back to your stop loss. It just goes directly to your take profit. So I'm telling you, man, this shit works. Look for divergence, man. Trade divergence. Forget the fucking MACD and the fucking ST and the TNT and the LUV and the rest of it. Just forget it. Just do what I'm showing you here. But I'm not a financial advisor. I'm just explaining through education, trading education, how this works. All right, I need some water. Okay, let's finish this off, eh? We're going to look at oil now. This is the last instrument of today, okay? So up here, we have like a 1, 2, 3, like a 4X top. See that? And we draw that right from here all the way down here like that. We put on the arrow because we drew it right to this one. Actually, there was a trade before that. Okay, there's this one where you would have entered on the opening of the candle. And then there was this one. Let me show you this one. Right here like this. Okay. This entry was 5, 10, 15, 20, 25, 30. 35 minutes before this trade here. The entry was right here. Let me show you. Okay. Your entry point would have been right there on the opening of this candle. And it came up and it missed your stop by like 5 pips. 5 ticks, 5 points. That's what it missed it by. And the line would have been, you know, from here to here. And you would have got in here and you would have sold it short on the opening of the candle with the arrow on top of it. Your stop would have been 22 points. Did it hit the 20? Ah, shit. It hit 2-to-1, man. See that? Then you stretch out the line and you do this trick, this trade. It's not a trick. If you would have sold it here, your stop would be right up here, 50 pips. How much did it go down? It went down 133 pips. Or ticks on $1.33 on oil. Okay? Then on the way down, what did we have? We also had a higher, no, it closed above. Okay, there's no higher close, sell it, down it goes here. There's just the divergence. Okay? But then we had more divergence down here. Low and lower low. Right there, like that. See that? That lines up. I don't have it perfect there, but it lines up. It's divergence. See, low and lower low. That one's going down. This one's going up. That is divergence. But before we did this trade, there was a trade right here. Can you see it? I just want to show that last higher close right here. Higher close right near the 5. As soon as this candle opens, where I have the thumb down, sell it, down it goes. How many pips there, or how many points there? 83 on that one. So you had a sell up here, a sell here. You got 2 to 1. Another sell here. You made your target. There wasn't, well, there could have been another one here too, and it went down, actually. Yeah, there is. Because this one here closed near the 5. Look at that. There's another trade. Look at all those trades just on one run down. Can you see that? So yeah, you would have got short right there. Closed here. You would have got, oh yeah, you would have got short right here. That's where you would have got short. Yeah. It's buried in there. See that shit? Anyway, there was a sell here and it went down. It was a winner. There was another sell here. It went down. It was a winner. Another sell, another sell. There's 4 sales, all winners. And then we had a buy right in there. And the stop was 71. Did we get 71? Oh, yeah, there's 80 right there. There's 81. And here's 2 more trades. Let me show them. Why not? Lower close, buy it on the opening of this candle, and up it goes. Lower close, buy it on the opening of this candle, and up it goes. And see right here what this is? Let me show you. Let me show you the last trade of today. It's a smack up, ladies and gentlemen, a smack up. And we had the proof of them buying off the main pivot of the day. Right there. So you would have got long right here. And up it goes. Here's another one. Lower close, buy it, up it goes. And that was the last there. That's the last one. I got to put it on. Lower close, buy it, up it goes. See all those trades, man? That's how many trades? 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, man, on oil today. All of them winners. All of them. How do you like them apples, huh? Apple pie? Oh, there's nothing like American apple pie. Oh, boy. Okay. Thank you so much for listening and watching, and I hope you come back on Monday to see some more. Oh, that's what I got to tell you. Now, I'm sure if you visited some other streams lately, they're all talking about, oh, they're giving all these excuses why they can't trade, and Christmas and Hanukkah and hooray, hooray, halala. Okay? That's fine. You do what you want. You'll do it anyway. But I just want you to know I will be here on December 18th, 19th, 20th, and the 21st. I will be here. I will be doing videos on these 4 days. Okay? Then we'll have the Christmas weekend, right? 25th. So Christmas Eve is Sunday the 24th. I won't be, I don't think, no, I won't be doing one then. And then there's Christmas Day. And then the next day, there's Boxing Day. We celebrate that in England and Canada. I don't know if they do that in Australia or not, but if anybody doesn't know the reason behind Boxing Day, oh, let me tell you. A few hundred years ago, and they still think this way today, but it's not as expressed as much. In England, a few hundred years ago, us people, a lot of the people were known as peasants. We had the rich and we had the very, very poor. which were called the peasants. So all the Christmas toys that the rich people bought for their kids, okay, the next year they'd buy them all brand new toys again, but they would take the old toys from the year before and they would wrap it up in a box and they would go to where the poor people lived, which were the peasants, and they would give them their last year's Christmas gifts, which is kind of nice, but anyway. That's what Boxing Day represents, if you did not know. Maybe you've never even heard of Boxing Day. Like, especially like Americans have never really heard of Boxing Day. They go, what the hell's Boxing Day? But anyway, I just want you to know that I will be here, like I said, I'll say it again, 18, 19, 20, and 21. Maybe even 22. Okay, there'll probably still be people trading on the... People love to trade. They'll be trading all next week. There's no reason for you to stay home and go boo-hoo and not trade. There's no reason, okay? And then, like I said, on the 24th, 25th, and 26th, no, I will not be doing videos on any of those on the 25th or the 26th. I will be doing my next video on the 27th and the 28th. If it's really, really like bad volume and we don't see no movement whatsoever, well, I won't do it. But I know there will be movement. I know there will be. Okay? And so we'll be looking at it 27, 28, and 29. So come on back next week, okay? All week I'll be doing the videos, okay? Right on. Okay, that's it for today. Thank you for listening and watching. Please hit the like button. Please subscribe. I'd really appreciate it. Good luck and good trading.